Good evening, ladies and gentlemen. A warm welcome on behalf of CIBC First Caribbean International Bank to our mortgage webinar. My name is Carol Mangal. I am the Senior Relationship Manager for Sales and Platinum Banking with CIBC First Caribbean, and I will be your host this evening. Owning a home is one of your primary goals, and we at CIBC First Caribbean are committed to helping you achieve this goal in the most efficient, cost-effective, and hassle-free manner. This evening, we have 5 panelists who will share pertinent information which will adequately prepare you to undertake what most likely will be your biggest financial decision. We invite you to enter your questions in the chat, and we will be happy to get our panelists to answer as many of your questions as possible. To start off this evening's webinar, I would like to introduce Mr. Nigel Oliver, Country Head of CIBC First Caribbean St. Lucia, who will deliver some brief opening remarks. Welcome, Mr. Oliver.
Carol, thank you very much. A pleasant good afternoon and a warm welcome to all our special invited guests, our panelists, and our colleagues from CIBC First Caribbean. It is certainly a delight for us this afternoon to be able to share the next hour and a half with you as we try to take you through what the typical process journey would be with respect to obtaining a mortgage. This typically is one of the milestone decisions a person has to make with respect to the investment. And I sitting here this afternoon, I have recollection of just over 20 years ago when I got to that point and I had to decide, do I or don't I? And there was certainly some apprehension, despite the fact that I was a banker of about 10 years prior. And but I must say, having engaged my loans officer and being walked through the process and engaging the various partners and becoming far more informed before I really got started made a big difference for me. So it left me, at the point where when I made the decision, I was very comfortable with the decision that I had made. And so we're hoping this afternoon when we are through that this certainly goes a long way in helping you to be able to feel more comfortable about that decision. And certainly that you can then reach out to us as a financial partner and seek to get the process started so that you as well can get to that end goal. So again, thank you so much for taking the time off this afternoon to be with us here. And, we do look forward to the next hour and a half and really would also appreciate whatever questions you have that that may not be answered by the presenters who would follow me. So thank you very much. And Carol, back over to you.
Thank you very much, Mr. Oliver. And please remember to enter any questions you have for Mr. Oliver in the chat. Our first panelist is Ms. Shade Joseph Danzi, who is a Business Development Officer and specializes in mortgages at CIBC First Caribbean. Ms. Joseph Danzi will discuss the documentation needed to qualify for your piece of paradise. Welcome, Ms. Joseph Danzi.
Thank you, Carol. Good evening, everyone. Allow me to just share my screen, please. Okay. So my name is Ms. Joseph Danzi, Business Development Officer at CIBC First Caribbean, and this evening I'll be taking you through the Homeowner's Guide to Acquiring a Mortgage. You're ready to build or buy, what should you do? The first step would be to have a CIBC conversation, and this would be together with your banker. You'd first discuss your proposal, review your income versus expenses, discuss associated mortgage expenses, determine your eligibility for pre-qualification, and discuss any other goals that you wish to achieve in the near future. The second step would be to know your documents. First, we have our proof of identification, which can be any of the following: a valid ID card, driver's license, or passport. Proof of address, which can be any of the following which confirm your residential address: recent utility bill, job letter, or bank statement. We will also require the last 3 months statements for all loans, credit cards, hire purchase accounts, and deposit accounts that are not held with CIBC. Confirmation of funds to cover expenses associated with the mortgage are also required, and those are fees such as bank fees, legal fees, and insurances. In your documents, we still would need the sale agreement, a copy of your land register. For salaried employees, we would require your job letter and your full month's payslip, the most recent of that. Self-employed applicants, we would require the last 2 years' financial statements, which can include profit and loss, balance sheet, and cash flow projections, a copy of your tax returns or assessments for the last 2 years, and a bank statement for the past 12 months on the business operating account. However, for construction mortgages, we require a bit more documents, and they can include documents for your DCA approved plans. So a copy of your DCA approved plans, confirmation of payment for your DCA compliance certificate, a detailed contractor's costing, a fixed price contract, which is the contract drafted between contractor and customer, 2 reference letters from persons who have previously availed of your contractor's services, an appraisal report. This report will provide information such as your current value of your land, the cost to construct your proposed building as per your DCA plans, the projected value of your property upon completion, and the property insurance value. It is also important to note that there will be ongoing costs after your property has been completed or purchased, and this can include annual property tax, annual property insurance, life insurance premiums, and the general home upkeep. At CIBC, we can also offer escrow accounts or easy cover loans that can provide financing for the aforementioned. Our current CIBC mortgage offers 95% financing on home purchases, up to 90% financing on residential land purchases. For construction mortgages, if you already own the land which you intend to build on and there's adequate equity, you may not require a further deposit. Our loan term is a max of 45 years or up to age 65 or retirement, whichever comes first. Competitive interest rates and fees. And at CIBC, there's also the option to switch your mortgage, where we will cover or help with the switching cost. As we come to the end of my presentation, I would like to refer you to our CIBC FirstCaribbean Realtors Hub. It's a site with access to a list of our local real estate agents, and these agents are readily available to help our customers acquire their new piece of paradise. And their contact information, website, their current listings can all be found at the CIBC Realtors Hub. Thank you very much. Back to you, Carol.
Thank you, Shadi. I would like to remind the audience to enter any questions for Shadi in the chat. Our second panelist is Mr. Hildreth Lewis. Mr. Lewis is currently the Permanent Secretary in the Department of Physical Development and Urban Renewal in the Ministry of Infrastructure, Ports, Transport, Physical Development, and Urban Renewal. Mr. Lewis is the holder of a Master's of Arts in Tropical Caribbean Architecture. Over his 25 years of service with the government of St. Lucia, Mr. Lewis has held various roles, including architect, chief physical planning officer, and deputy permanent secretary. Mr. Lewis will discuss the role of the Development Control Authority in the construction process. Welcome, Mr. Lewis.
Thank you, Carol. Good afternoon. Thank you for having me here. So I would like to present to you some discussions on the residential development application process with the DCA. But I'd like to, because I am the permanent secretary of the Department of Physical Development, well, I'd like to probably share a few words about my department first. To allow me briefly to tell you what my department is about. And we have a mission that is to improve the quality of life in St. Lucia through effective, integrated, and sustainable land administration and management policies and practices. And we have a number of areas that are within our mandate, including land registration, administration and management of state lands, physical and power planning, land surveying and mapping, land acquisition, valuation surveying, architectural services, and we also regulate the professions of architects and surveyors. We currently have a staffing of about 175 persons. So if you notice, all of those core areas of mandate have some impact on development generally, and so a residential home would fall within quite easily a number of those core areas of mandate. So my idea would be to share with you some of the fundamentals of the approval of construction of a dwelling house in St. Lucia. And in doing so, we would be looking at the development approval framework for especially residential structures in St. Lucia. But we need to look at probably look at 4 core areas while doing so. And one of them would be to ask the question, what is a residential structure? Who would be the main players of a residential development? Then we take a look at relevant legislation, and then at the approval process within the Development Control Authority. Okay, so residential structure. I am going through, I think we need to define what it is, and I have used terms or definitions from the Physical Planning Act as well as the Developer's Manual. That's a guidance document that we use for the purpose of reviewing and appraising development. So a dwelling unit would be a room or rooms connected together forming an independent housekeeping unit for a family, and it contains a single kitchen. And so if you then, the question would be, what is a family? And so we have that definition for a family being a person or a group of persons living together whether by marriage or legal adoption, and occupying a whole or part of a house with cooking facilities. And so, you know, a family, according to our legal framework, would constitute or includes foster children, guests, and domestic servants. And so a single family dwelling house would mean a building that is intended to be used as a separate dwelling unit without essential facilities shared by other dwelling units. Now, having said so, it means that there are multiple modes of dwelling units. You can have multi-family dwelling houses, as in apartment buildings. But I think we would concentrate today on a single family dwelling house because that's what predominates in our context. So the main players of a residential development, we have quite a list here. We have the client / developer / landowner / homeowner, and any of those names or designations can apply to a person, depending on the level of process or at what stage of the process that they've been in getting a home. So, of course, if you already own a home and you have you want to do some extension, then you would be a homeowner. If you're just being the owner of the land and you're hoping to build a house, you're just a landowner. And as you begin the process, you are with the DCA, you are considered to be a developer. As you go to the bank, you are a client. So we have legal professionals or attorneys. Then we have contractors and tradesmen. We have the banks or financiers or mortgagors. Not forgetting material suppliers, the statutory undertakers like the utility companies and the approval agencies, the DCA, health approval, sometimes fire. And then you have the design professionals that include architects, engineers, land surveyors, quantity surveyors, valuation surveyors. If you notice, and all these players at some point will have a role in getting a house built, a residential house built. And so with all these players, there is a need to have one language or a form of communication, and that's drawing. This is the language that is understood, that will be understood by every single player as to what is intended, and of course, those drawings are prepared by the competent professionals, the architects, the engineers, and they are used by every other player within the process. Relevant legislation, we have a number of pieces of legislation that have an impact or speak to specific areas of residential development We have the Land Surveyors Act, the Land Registration Act, Engineers Registration, Architects Registration, the Physical Planning and Development Act is the main one as it relates to the DCA. But you also have public health, which speaks to waste disposal, septic tank, and the like, and Electricity Supply Act and the Water and Sewage Act. At various stages of the process, these pieces of legislation will have an impact on how the development of a residential building is conducted. And so going back to the number of players in the process, they would, the relevant players will be guided by the provisions of those pieces of legislation. The DCA approval process, I think it was useful to extract from the Physical Planning and Development Act the provisions that speak directly to the process of getting your plans approved and what it means. And so I have recreated it, I've represented it essentially verbatim. It just says in simple terms that you cannot carry a development of land in St. Lucia without first getting DCA approval. And it actually that if you do so, you would be possibly committing a criminal act, and that you can be taken to task for that. So it's important as a prospective homeowner or someone with interest in getting a building constructed that guided by that Physical Planning Act. But it also says what constitutes development. And so there are two basic concepts here. One is use of land, and the other is actually an engineering operation. So use of land, what do you intend to use the land for, or the building that you would be building? In that case, it would be for residential use. And the actual engineering operation would be the actual building. So you can go about anything. If the land is approved for residential, then you can use it for anything that is found to be within the realm of a residential building. Right? And that would be considered to be an approved use. There's what you call permitted development, and it means that even if you should be getting approval for a building operation, there are some activities that you are exempted from, and I think it's important that that persons know that in the realm of residential buildings. And I have presented it here. It's in the form of a schedule. It says that garden huts other than garages, if it's not going to be used for human habitation, or you're not going to conduct any activity of a commercial nature, gates, fences, and walls not exceeding 4 feet in height. And if you're going to have an extension of an existing building of not more than 1/3 of your existing floor area. of a single dwelling house. So those elements, those that are highlighted in red or in once you meet those conditions or these activities meet these conditions, you would not be required to get DCA approval. And so it's in that context, say as bankers, there would not be a need to get a letter of approval or drawings from the DCA. If somebody comes and says they want to build their fences, they want to build a fence wall that is not beyond 4 feet in height. Of course, before construction starts, you need to get the approval from the DCA, and that's the responsibility of the homeowner. There are all the list of design professionals that can help in getting that done. However, once a property has gotten DCA approval, you will have drawings that have the DCA approval stamp, and that would include drawings that show accurately your boundary markers and the layout of the building on your site, as well as other important issues like sewage disposal. And this is an example of the approval stamps that you will get on those drawings. So once those drawings have been stamped and signed by the DCA, you are essentially in a position to submit this to your financial institution and your contractors, and you are most probably ready to begin construction once you've fulfilled or taken some other steps like develop your contract with your contractor and get your construction professional to help you supervise the construction. Thank you, and I'd be happy to take any questions that you may have.
Thank you very much, Mr. Lewis, for this very informative and insightful presentation. Our third panelist is Mr. Alden Delmar. Mr. Delmar is a registered architect who has been employed with the government of St. Lucia for over 15 years. Mr. Delmar holds a Bachelor of Architecture degree and a master's degree in project management, as well as a specialist diploma in urban environmental management. Mr. Delmar will discuss the pre-construction process, preliminary designs, and what to expect post-construction. Welcome, Mr. Delmar.
Yes, good afternoon. Thank you for having me. Thank you, Carol, for introducing me. What I'm going to do is explain exactly what you need to do when you build. Now, I'm not going to have a presentation, but I'm going to just talk. And from that, I hope you have some questions at the end that you could ask. So let me break it down into the 3 phases of construction. You have the pre-phase construction, your construction phase, and your post-construction. So in your pre-construction, what to expect? This is your design stage. This is where you have an idea of what you want and you go to an architect or designer. Now I said an architect or designer because the government of St. Lucia protects the practice of architecture. As Mr. Lewis said earlier, he spoke on the act that allows architects to practice as professionals in St. Lucia. So you may go with an architect. Some people say architects are more expensive. Not necessarily, according to who you go to or your designer. I am here to talk for architects, so let's go in that direction. So you get an architect. When you get the architect, he helps you to prepare a brief. Now, what is a brief? A brief would speak on what you want. So he will translate what you want in your mind to paper. But to do that, you have to agree on certain terms. You would tell him your budget, very important, your budget, because it would decide on what you can get if it matches what you want. Your brief would also speak on the location, the topography, your neighbors. You may have a building close to the road where the road is not your primary objective. You want to see a view instead. So the architect may be able to block out that road in the design. Then you will bring other particulars of your proposed design. So these other particulars may be the architectural style you want to follow. You may want a traditional house or a very contemporary house, but all of that would be ironed out in the brief. So you and your architect would sit down together and prepare that brief. After you prepare that brief, the architect now would use that and create drawings so the general communication can happen. So at first, you explain to him, and if I can say it simpler, he goes into your mind and translate what you want to a set of drawings that every other professional, quantity surveyors, engineers can read. He prepares these designs and he prepares them so you could get them approved at the DCA. Most architects are supposed to know how to get drawings approved at the DCA without errors. Because a lot of people do send drawings to the DCA, but they have a lot of errors, and because of that, your drawings may take a lot of time to get approved. So when choosing an architect, you should find somebody who knows what they are doing. And how would you know that? Ask that architect, he or she, their list of clients, and you may be able to talk to them. Find out, was that architect good? Did he give you what you wanted? Did his drawings go to the DCA, and was what he had on the set of drawings, were you able to build that? Now, the architect prepares that design, and that your set of drawings would be the construction drawings, and they would have the side plans, the floor plans, the elevations and details. All of these are necessary to communicate to all of the other professionals that would be using them to erect that dream of yours, that thing, that building that you are going to live in. And these drawings would be submitted to the DCA. A good set of drawings, when they go to the DCA, the first thing they would do is go to the health, because we're talking about a residential building. Unless your residential building passes a square footage of 2,500 square feet, it would not need an architectural stamp. Now, the architectural stamp is necessary for the DCA also when your house or your residential building passes 2,500 square feet, or there is an apartment in there, because some people, they would build a residential building, but they have enough and they would probably put an apartment downstairs. That happens a lot. When that happens, you would need an architect to look at that setup, to design and to have that drawing approved at the DCA. So it goes to the Ministry of Health, then the DCA, and then you have a set of drawings. That brings us to the construction part of the process. Now, the construction part of the process, if you had an architect at the start, he would carry you on through the construction part. His role in the construction part is to communicate to you what is happening. You may know a fair amount of construction, but the process is better handled by professionals who can advise you, well, you should sign a contract and you should have this in your contract. And you should be able to look at the contract and see that contractor and have him agree with the terms of your contract. Now, your construction process is a project on its own. There's the time, the scope, and the cost. All of these things you have to keep, all of these constraints, you would have to keep aligned. Any movement out of it would cost you more. It will affect your scope and the time will increase. Some people, when they're building, they would say, but I want to add an extra room. You may be able to add an extra room, but sometimes your room may have you go back to the DCA. That increases time, therefore cost increases, therefore the scope increase also. Or some people may say, I do not feel like spending all of that money and try to, I don't want to say shortchange, but try by saving, stop the payments that has to go to a certain part of a project. That also may affect the project. So when you go to construct a building, you get your contractor. I suggest that you have an architect speak to all of that technical aspects of your construction and communicate that back to you. It does not have to be the same architect who designed the project. Some people may believe that, oh, he started, it is a very good thing if you started a project with one architect and you continue to the end of the project through the post-construction to the end of the project. But if you cannot, you may be able to get another architect to keep your project or give you enough information about your project that you can keep it in the project triple constraints, the time, scope, and cost. Your contractor, just like when you chose your architect, you'd find out what can he do, what has he done, what tools does he have, his financial, just like the bank would ask for financial statements. He may not want to give you financial statements, but you've given him a contract. So he may be able, you can ask him for it. Ask him for his financial statements, probably for 2 years, to see if he can carry your contract. Also, find out the professionals that he has working with him, his clerk of works, if he has one, if your project is large enough for that. Or you can look at some projects that he did and some previous clients that he had and match that with what you want. Also, you'll have your architect there. You'll be able to also advise you at that time. And then you have your post-construction. The architect should still be there. Because in the post-construction, what happens is this. Your contractor finishes your work and he hands you the keys. On larger projects, what happens before these keys are handed, the architects carry out a snag. And what they do in that snag, they open every single door, cupboard door, flush the toilets, look at the paint finishes, every single part of that project. And he says to you, yes, this is what you paid for, and the quality is what he expects from the contractor at that price. Then in your contracts that he would have told you what to ask the contractor for, he would add a part of that called the practical completion. In the practical completion of a contract, you would have the ability to give the contractor would pass the keys to you, and then you'd have a defects liability period. Now, the defects liability period is, some defects liability periods is the time is a time where a contract finishes, the project finishes, but you start using the project. So you start living in the house. If anything goes bad during that time that is your defects liability period, then the contractor has to come to fix that thing. It would have been in your contract, so legally you would have to come back. If it's something that the architect deems that went bad that was no fault of yours. It was probably poorly done, and that it failed, he has to come and fix it. So you see at that part, the post-construction part, you would still need the architect. Some people go as far as having the architect prepare operations manual, where the information for your house, all the information, including the names of the rooms, where pipes are located, the codes for paints, where they will produce, all of these things would be in your operations manual. Now, your operation manuals may even go as deep as saying you have a warranty on your fan that the contractor, the ceiling fan, that the contractor installed, and there's a warranty that goes out in a year. So if it does go out in that year, you can probably go back to courts and say, hey, a ceiling fan was installed at my house. This is the serial number, and courts will check and they say, yes, you have a warranty on that ceiling fan. So all of these parts, the architect would be able to advise you on, and that would help you with your entire, and it'll make your process much smoother. A lot of clients have less gray hairs when they choose an architect to guide them through the process of building, because it's a very difficult process when you do not know what you are doing. And one last thing I have to say before I close is you have to remember the maintenance of your project. You do not want to build a building that at the end of the day you cannot maintain. That is paint, probably reseal the roof, pressure wash, all of these small items. So you should include that in when designing that new building. Thank you.
Thank you very much, Mr. Delmar, for this very informative presentation. Our next speaker is Ms. Renee St. Rose, who is an attorney at law and a notary royal, who has been practicing in St. Lucia for the last 19 years. She's a partner and the head of legal at the law firm Foster's. Ms. St. Rose is also the current president of the St. Lucia Bar Association. Ms. St. Rose will provide an overview of the legal process to acquire your home. Welcome, Ms. St. Rose.
Thank you, Carol. As Carol mentioned, I will address the legal process and requirements for mortgage financing. What we know in St. Lucia as mortgages are really termed under our law hypothecary obligations or hypothecs. Hypothecs create a charge on land, including a house if there is a house on the land, in favor of a person who has an obligation to another. Mortgage financing under our law would therefore mean that a customer has agreed to grant a charge over his or her property to secure the repayment of a loan to a bank or another individual. The hypothec takes a form of a notarial instrument, which means that it is prepared by a notary royal and it is executed before a notary royal. The notary also has the obligation to register the hypothec. All lawyers in St. Lucia are notaries royal, and by agreeing to execute a hypothec, a notary is undertaking and agreeing to be bound by certain obligations. The obligations of the notary are in relation to the hypothec, is to ensure that the property is properly described in the hypothec. They also need to ensure that the correct parties are involved in the transaction. that the property is free and clear, and to allow for registration of the hypothec, that is, there are no claims made by any person or government department against the property that could affect the registration of the hypothec. The notary also has to make sure the terms of the hypothec are understood by all parties, particularly the mortgager as the person who is granting the hypothec. And of course, as I mentioned, the obligation to register the hypothec. If you are purchasing property through the mortgage financing, the notary will also be responsible for preparing and registering the deed of sale in relation to the property that you are acquiring. So after your mortgage has been approved by the bank, the next step would be to choose a lawyer that is a notary, because all lawyers are notaries, to proceed with the preparation of the hypothec and, if necessary, the deed of sale. After you have chosen the lawyer, then the lawyer will require certain documents and information from you. And those documents and that information is necessary for the notary to be able to complete and fulfill their functions that I would have mentioned earlier. So the notary would request, lawyer would request that you provide certain property documents. So to ensure the property is properly described in the hypothec, the notary will need to undertake searches at the land registry and the survey and mapping department. But to do so, the notary will require the block and parcel number for the property that you are acquiring or that you are mortgaging. In addition, your title deed and the survey plan for the property if you have it. If you are purchasing property, then the notary will require this information from the vendor, as this would properly identify the property that is being conveyed by the vendor. Then to ensure the correct parties are involved in the transaction, the notary will need your identification documents, such as a passport, driver's license, or national identification. This is necessary to ensure that you are in fact the person identified on the land register for the parcel of land and you are mortgaging your land. If you are purchasing property, likewise, the notary will require this information from the vendor to confirm the identity of the vendor and make sure that the person selling the property, the vendor, is actually properly identified. The notary also has to ensure that there are no claims against the property, and to confirm this, will require certain letters or certificates from government departments and registries, and you would be required to provide that information. Some of this information can, of course, be obtained by your lawyer on your behalf, by the notary on your behalf, but essentially these are the documents that you will be required to provide. You would need to provide a letter from the Inland Revenue Department confirming that there is no outstanding liability for income tax. And this letter can be obtained by attending to the Inland Revenue Department with a form of ID. The request usually takes about 2 to 3 business days, but the time frame is dependent on whether you have filed your tax returns and whether there are any outstanding liabilities. You will also need to provide a letter from the another letter from the Inland Revenue Department, but in this time in relation to land and house tax. So this can also be obtained from the Land and House Tax Department by completing a form and submitting the request. This takes a little longer, usually about 7 days, to get back from the Land and House Tax Department. However, the time frame is also dependent on whether your property has been assessed for property tax and whether there are also outstanding liabilities. You will also be asked to provide a letter from the National Insurance Corporation confirming that there are no outstanding liabilities for national insurance contributions. This can also be obtained by completing a form, submitting it to the National Insurance Corporation, and the time frame is about 2 to 3 days. The notary will also need to confirm that there are no judgments registered against you at the Office of Deeds and Mortgages in St. Lucia, which is where judgments are registered. The notary will undertake their independent searches and obtain the necessary certificates. However, some notaries request that clients proceed to obtain this directly. And this is simply a request that can be made of the Registrar of Deeds and Mortgages and takes an average period of about 5 days. The above documents that I mentioned are documents which is the Inland Revenue documents, National Insurance Corporation. These documents would also be required in relation to a vendor if you are purchasing property as part of the mortgage financing. Another point that needs to be addressed is the notary has to inquire of you, and you also have an obligation to ensure that if you are purchasing property, that there is no overriding interest or third-party claims in relation to the property. So it is important to inspect the property that you are purchasing. So if there is bare land, inspect the property, make sure there are no squatters or individuals with prescriptive rights. If there is a house, confirm that if there are individuals residing in that house, you need to confirm that you have to understand what the interest is in the house and ensure that it is considered. For example, they could have a lease, and that lease could be for a long term that you would have to honor that lease or terminate in accordance with the provisions of the lease. So it's very important to also look at these overriding interests. So once your documents are in order, the notary will meet with you to review and explain the terms of the hypothec. There are times when the notary might require a party to undertake independent legal advice. Independent legal advice becomes necessary if the notary is of the view that a party should receive separate advice on a transaction. For example, when a husband uses a matrimonial home as security for a business loan, it is important for a wife to understand the implications of signing the hypothec, as it would mean a home is security for the loan, and in the event of default, the home could be put up for sale for repayment of the debt. In such an instance, it's always important that that advice is independent of the notary who is preparing the transaction and in relation to, in that case, the husband. The final step in relation to getting your mortgage done would be the registration. And to proceed with registration, stamp duty must be paid to the Inland Revenue Department. Stamp duty is 0.25% of the mortgage amount, and the stamp duty on a deed of sale is 2% of the purchase price. Land registration fees estimate about $30 to $40. There is an additional $10 that's payable for each additional parcel if your acquisition includes several parcels of land. Then we have legal fees. Legal fees are prescribed by a tariff set by the Bar Association of St. Lucia and is dependent on the mortgage amount and the purchase price. All lawyers are bound by that prescribed tariff that is set by the bar. The entire process from instruction in relation to a mortgage to registration takes about 3 to 4 weeks, but it can take as little as 7 days if you have all of your compliance letters and documents in place. So to recap, to proceed with your mortgage, you will need the following: your property documents, your identification documents, clearance letters from the Inland Revenue Department for income tax and property tax, clearance letter from the National Insurance Corporation, certificate from the Office of Deeds and Mortgages. And if you have all of these documents in order, it could take as little as 7 days to proceed. Of course, as I mentioned, you also require stamp duty and registration fees. And then, of course, your legal fees and a lawyer to undertake the transaction. Well, thank you. I hope to have been clear in setting out the legal requirements. I'm happy to answer any questions you may have.
Thank you very much, Ms. St. Rose, for this very detailed presentation. A reminder to the audience to enter any questions you may have for any of our panelists, Ms. St. Rose, Mr. Lewis, Mr. Delmar, Ms. Shadi Joseph Danzi, in the chat. Our final panelist is Ms. Chanel Wallace. Ms. Wallace earned a Caribbean Certificate of Insurance Practice designation in 2015 and is currently the Insurance Agency Manager at CIBC First Caribbean for the EC Islands and St. Martin. Ms. Wallace will discuss all things insurances when it pertains to home ownership. Welcome, Ms. Wallace. Hi, Ms. Wallace, I think you're on mute.
Oh, I am terribly sorry. Thank you, Carol, and good evening, ladies and gentlemen. A special welcome to all invitees, and thank you for availing yourself to this mortgage webinar. Taking out a mortgage may be one of the largest or hugest financial commitment or investment that you could make. And picking the right insurance product or products could help you, could give you a peace of mind and protect your investments. So what are the related insurance products you should be thinking about when undertaking or taking out a mortgage? So I will be sharing my screen with you. So we will look at the applicable types of policies that we can effect. So we're looking at our, from the ground up, we now constructing, we're in the construction phase of our mortgage. So we look at contractors' works policy. And the purpose of this insurance policy is to cover both the temporary and permanent works while in the course of construction until it is handed over by the contractor to the customer. And this cover is usually given under two sections. We look at the all-risk type cover, where in that policy, whatever is excluded is included, or whatever is not excluded is included. So if you have a loss, let's say by burglary, and you review your policy and you see burglary is included, it is covered. If it's not included, it is, if it's not included, it is covered. So any excluded perils is included. And we look at the other type of cover is the public liability cover, that is cover to third parties. So third parties coming up on the premises, and any injury or damage to property to those third parties will be covered under that policy. The cover is provided not only during the erection phase of your building, but there's a subsequent period called the maintenance period, which is given by the customer at the onset of the policy, and it could be up to 1 year from the completion of your construction. The sum insured is the estimated contract price. So the total contract price upon completion of that building is what is covered. And in addition, some additional sum is insured, like your contractor's plant and equipment, temporary building. Sometimes we build sheds when we are building to house maybe equipment, additional materials, that can be covered as well. And the public liability, which I spoke earlier on, is included at no additional premium. So points to note when taking out a contractor's works policy. If the homeowner has engaged a contractor, it is advisable that both parties have their own insurance cover. What it is that the contract works policy would protect the customer for the property during any loss or damage during that building process. And the contractor has his own policy in place to protect him against any loss or damage to that building against his own negligence. And the customer, of course, we should always advise the customer to insure the property at the replacement cost. That is very important because at the end of the day, you want the same building, the same property back, being reinstated. So you must insure at the replacement, the replacement cost and not the amount that you borrow. Okay, because
not doing so could, there are implications to it, and then you could fall to the average clause or the condition of average, which we will speak on subsequently. So the complete, your home is completed, you're now ready to move in. What is the other, what is the next step in procuring your insurance? So we look at the home policy insurance. And the home insurance type policy is for private residents. And this policy combines various personal protection, which include losses occurring to one's home, its contents, loss of use of the building, loss of personal possessions, and liability. It's a very comprehensive package. Home insurance is referred to a multi-line policy, meaning that you could get many other policies in that cover, and it is for a single premium. And the homeowner can, of course, select additional cover, extend the cover, reduce the cover accordingly. And of course, when he does that, there may be an additional premium, or it may be free of charge, depending on the insurer. So I spoke of the condition of average earlier, and that is very vital in terms of advising clients when they insure that this condition is considered and it's part of the policy. Why is that? Every year that we have to consider inflation. Right now, we see cost of building materials increasing. So getting your home insured, you must consider the value or the reinstatement cost to do so. And under insurance is simply insuring your property for an amount that is lower than its true current value or reinstatement value. And where there is underinsurance, the insurers are only receiving a premium for a proportion of the entire risk. Okay, the entire value at risk. And this condition aims to have the customer be responsible for the rateable proportion of the loss. This means that the customer is considered to be his own insurer for the portion of the risk. And essentially, that means he's indemnifying himself for the proportion that is not covered by the insurer. And a formula that we consider when we looking at that condition is the sum insured over the full value of the property times the loss. So a simple example would be, let's say you insure your home at 100,000, but the building is 200,000. Essentially, you've insured half the value of the property. And now you have a loss, $5,000. Because you've insured half the value of the property, your claim will be settled half the value. So you'll not get $5,000, you'll get $2,500. So it's very important that we advise the clients think of when they're insuring that they insure at the full reinstatement value. And to counteract this, the customer should check the value of their home each year to determine if there's a need to increase the coverage amount. And the value should be evaluated when extensive renovations have been completed or upgrades to your home are done. So to highlight and reiterate, please don't get caught being underinsured. So next type of policy that we'll look at, which is provided by the lender, the bank, that is mortgage indemnity. Mortgage indemnity insurance is a product designed to benefit and protect the lender and reimburse the lender if the borrower fails to make monthly payments within the period that the bank would have extended outside the normal lending criteria. The mortgage indemnity insurance can also minimize your down payment and increase the amount of financing you receive for your home. And this can certainly make a mortgage more affordable and qualified for as well. We look at points to note for the mortgage indemnity, and this really truly a mortgage indemnity policy is not a policy. It's not an insurance policy, but it's a financial instrument that is written on an accommodation basis, because you have to review the due diligence and that client to see if that client could pay their mortgage payments and so forth. It is, and it must be written in association with the homeowner's policy. So you take out the mortgage indemnity policy, and then you take out a home insurance policy as well. There's only one premium paid for the lifetime of the policy. So if your mortgage indemnity covers you for 10 years, you pay one premium. There's no renewing of it, and there's no paying every year of it. If that policy is canceled, there's no refund due on that cancellation. And in the event of a claim, the insurer is responsible for the amount guaranteed or indemnity. And the policy will terminate when the guarantee has been paid. So that's about it for related insurance products to do with mortgage. I will take any questions later. Thank you.
Thank you, Ms. Wallace, again for another detailed presentation. We now move into our question and answer segment, and there are some questions in the chat, and I will quickly go through them. The first one, and I think it's directed for Mr. Lewis. Can you get a house plan approved if you do not own the land as yet? Mr. Lewis?
Yes, thank you for that. So yes, you can, but that would be dependent on the current owner of the land agreeing to give you permission to apply for approval. So what normally happens is they would write a letter, it needs to be notarized to the DCA, informing that they are given permission to allow a person to apply for DCA approval on land that is registered in of that person who's given the permission.
Thank you, Mr. Lewis. The next question is actually for you again, Mr. Lewis. What if the construction is not completed within 12 months? Does the DCA approval has to be refreshed?
So no, DCA approval actually it has a lifespan of 1 year or 12 months to start construction. But once you substantially commence the construction, you have 30 months to complete that construction, or else you would need to come back to the DCA. However, if you do not start the construction within 12 months, you would need to renew your approval, and unless you change the design, then you can essentially send back copies of the same drawing that you got approval for, if that's what you intend to continue using, and get a reapproval.
Mr. Lewis, again, the next question is for you. Apparently, quite a few people are interested in what's happening at the DCA. You mentioned that when a wall is over 4 feet high, DCA approval is required. Is
Yes.
the width time similar to that of a house plan? Do you have to go to health and all those things?
So no, the requirements for a wall, a fence wall, is a whole lot less than a residential building. However, depending on the complexity or peculiarity of the wall, so might be some of the requirements. For example, if it is just a 5-foot wall, you need to show your foundation details and the section of the wall, and your site plan indicating where the wall is going to be located in relation to your lot. However, if it's a retaining structure, if it is meant to be holding back soil, then it may require the DCA may require that you submit, apart from the structural details, that you need to submit a certification from a registered engineer that the details of the wall are actually safe enough for the condition under which that wall would be operating. So it's only DCA approval. You would not require health approval or some other agency to give approval to your wall. But DCA may require your engineering certification, for example, if the wall is meant to be going to be a complicated.
Thank you, Mr. Lewis. And one more question for you, Mr. Lewis. If a plan is purchased overseas or out of country, do you still need to get DCA approval?
Yes, you do, because actually it is probably ill-advised that a plan be purchased out of country if it was not designed specifically for the site that it's intended in country. But there are a lot of things that in designing a plan of any building would take into account, and quite a few of those relate specifically to the peculiarities of the site. For example, where your prevailing grade is coming from, the orientation of the site in relation to the rising and setting of the sun, and very importantly, I think increasingly we are coming to appreciate where the main views or interesting views are, and so these would have an impact on the orientation of the building, even the layout of the building, as in how the rooms are put together to take advantage or to mitigate against some of the elements that need to be taken into account. So, for example, if you are the location of the road, you may want to keep your bedrooms on the further side of the road, to maintain some privacy or to give you some peace of mind in relation to the noise from traffic. If you just buy a plan because it looks beautiful, most probably the plan may not have been drawn your site in mind, and probably you would run the risk of not enjoying if it was built just according to the way the plan was written. You may not enjoy the house because certain features or certain arrangements are not beneficial. So it is advisable that if you see a plan that you think it meets some of your needs, that you need to engage a design professional to help you assess whether that plan may fit the lot that you are intending to put it on.
Thank you very much for that response, Mr. Lewis. The next question is for Ms. St. Rose. Ms. St. Rose, if a customer resides overseas, does the customer still need the documentation from NIC and Inland Revenue?
Yes. The customer still requires these documents. A notary would still want to ensure that, I mean, there wasn't any time when the customer was living in St. Lucia or any ties here in St. Lucia that there could be any liability. So in that case, the NIC would indicate they're not registered with them or not recorded, but they will issue a letter. And that is definitely something the notary would require.
Thank you. The next
Sure.
question is also for you.
Ah.
Can you explain the implications of a deed of sale where the nuda proprietus is reserved to the vendor?
The nuda proprietus is reserved. The implications are, I mean, it's not an ideal mortgage situation. In a case where the nuda proprietus is reserved to the vendor, I'm assuming the purchaser, when they purchased the property, they would have then obtained what we call the usufruct, which is the life interest in relation to the property. When a vendor retains a nuda proprietus, they basically have the title to the property, but they don't have the use. The use goes to the person who has the usufruct, which is the interest, the life interest in the property. If the purchaser is the one with the usufruct, it becomes it's not ideal because any mortgage that is granted to the purchaser is actually only the mortgage can only be registered against the usufruct's interest, which is the life interest. And so if there is a default on that mortgage, then the banks can only go after that life interest. So it's possible, it's just not the ideal mortgage situation. I hope that answers the question.
Thank you, St. Rose. The next question is for Mr. Delmar. What is the fundamental difference between a designer and an architect? Mr. Delmar?
Oh, can you hear me? I had to switch my device.
I can hear you.
Okay, so the designer and the architect. The architect, the practice of architecture is governed by St. Lucia. So the government has given architects that license to practice architecture in St. Lucia. And architecture, that is, a designer is different from an architect, where a designer does not have, or he may have the education just like an architect, but he is not licensed by the government. So the only people you can call architects, just like you cannot call everyone a lawyer or a doctor in St. Lucia, architects have that same privilege. You have to be licensed to call yourself an architect. I hope that answers the question. So that is the difference between the designer. The designer is not licensed, the architect is. Thank you.
Sorry, Carol, I think you're talking on mute.
Sorry. The next question is, if the land is subject to a mortgage, would the mortgagee have to grant permission for the house plan to be approved? Maybe Mr. Olivier, you can take this one as the mortgagee. Mr. Oliver, would you be able to answer this one for us? If the land is subject to a mortgage, would the mortgagee have to grant permission for the house plan to be approved?
So I probably can weigh in on that based on the experience that we have. In the DCA does not require
I'm not hearing you, Mr. Lewis.
Oh, I'm sorry. I'm sorry. So I was asking, when you refer to the mortgagee, are you referring to the bank or the financial institution?
Yes.
Okay. So, sorry for that. I suspect I may have left. I have an error in my presentation. But no, based on my experience, the DCA does not require any special permission from the mortgagee for approval of a house or development on land for which the mortgagee has an interest.
Okay, thank you very much.
It would only become that issue would only become relevant if there were to be a change in ownership, but not for approval of development.
Okay, thank you, Mr. Lewis. Another question, Mr. Lewis. How does the DCA keep track of the various construction work around the island to ensure the buildings are being constructed within the approved scope of the plan?
Okay, so we currently have a group of what we call building officers who, and we've divided the island into 8 zones, and we have a building officer for each zone 3 times a week, patrols or monitors the zone. When approvals are granted, the letters of approval are farmed out depending on the zone to the respective officers. And so their job would be to monitor that the construction that is taking place, as well as look out for construction that does not have DCA approval.
Thank you, Mr. Lewis. We have one question from Ms. Wallace. Why would a customer need mortgage indemnity? While you explained the mortgage indemnity vis-a-vis insurance, from the bank's point of view, why would they need it?
Mortgage indemnity is, as I said, it's actually a facility that protects the bank. So a customer comes in to secure a mortgage, and there's the lending criteria. 20% would be the advanced amount that the customer would have to inject into that mortgage, and 80% is financed by the bank. The customer may not have the adequate 20%, they may have 5%. So what mortgage indemnity aims to do is to cover the 15%, and that covers the bank's interest. So the customer gives the 5%, the mortgage indemnity covers the 15%, in aggregate 20%, and the customer is able to qualify for the loan. And it only gets triggered when the client defaults on that loan. I trust this answers the question.
Thank you, Ms. Wallace. Time is against us. And there are a few more questions. However, we would need to wrap up. So I would like to give each presenter 1 minute to give a closing statement emphasizing what you want the audience to take away from your presentation. And we will start with Ms. Centros.
Hi, Carol. Thank you. To take away, I would like the audience to just understand that it is not a difficult process. It is a straightforward process, and it is, once you have all of your documents in place, your mortgage could be undertaken complete in as little as 7 days. And just a reminder of what's required, it's just the property documents, identification documents. Key documents would be your clearance letters from the Inland Revenue Department. That's both income and property tax, and from the National Insurance Corporation, and your stamp duty and your legal fees. And your lawyer, your notary should be able to take care of the transaction. So it is on the legal side, it is not a difficult process at all. Thank you.
Thank you, Ms. Centrose. Mr. Delmar, closing remark.
Okay, first of all, I would like to thank FirstCaribbean for inviting me. What I would like to leave with everyone is the construction process and designing your dream home is not a difficult process, but you need to have the proper designer or architect with you to guide you through the process. Listen to them. I know everyone would know what they would like to have at the end, but have him put all of that information that you like on paper so it can be communicated to everyone else. That's it. Thank you.
Mr. Delmar, and again, a pleasure having you. Ms. Wallace.
Okay, so my last word would be that insurance is a risk transfer mechanism where you can shift your uncertainty of loss to another person. So in that case, a customer would want to have that shift to an insurer. On that note, I advise and implore customers to not be their own insurer, but to come in to the branch to have a discussion on your insurance needs with the competent and knowledgeable staff there. We are open 8 to 5 o'clock, or you could call us at 456-1128 or 456-1260 to discuss. Thank you, and see you soon.
Thank you, Ms. Wallace. Ms. Shade Joseph Dancy.
Thank you, Carol. I just want all our customers and persons on this webinar to understand how hassle-free financing with CIBC is. Our first step would be to discuss your proposal with a lender. Come down to any of our branches. We have 3 branches on island at Rodney Bay, Bridge Street, and Viewfort. Our sales specialists are readily available to discuss your proposal, provide you with pre-qualification, and guide you along the mortgage journey. And once you have all your documents and your prerequisites, it's a seamless transaction that we're happy to guide you through. Thank you.
Thank you, Ms. Joseph Dancy. And Mr. Hildreth Lewis, final closing words.
Okay, so thank you, Ms. Thank you to CIBC for inviting me to this webinar. I think importantly, what I'd like to leave with our attendees today is that there are a number of players in the process of getting a residential home or residential house constructed, and that each of those players know their place. They are specialized in the areas of their endeavor, and that we should give the interested party, as in the homeowner, the prospective homeowner, should give consideration to engaging the requisite professionals in the respective roles to ensure that they get a good product and they get a house that they can really enjoy living in. And I'd really like to say thank you again to CIBC for allowing me to be part of that discussion. Thank you very much.
Thank you, Mr. Lewis. We now now invite Ms. Wendy Pilgrim-Michael, our Viewport sales specialist, to give us some closing remarks. Wendy, welcome.
Thank you, Carol. Okay, so good evening, ladies and gentlemen. Allow me to extend a heartfelt thank you to you for attending our mortgage webinar. We hope that the information which was shared will be of immense value to you when considering your home purchase or construction. I'd like to express deepest gratitude and appreciation to our panelists who, despite their competing priorities, found the time to participate in our mortgage webinar to share pertinent and timely information. I wish to thank Mr. Hildreth Lewis, Permanent Secretary in the Department of Physical Development and Urban Renewal in the Ministry of Infrastructure, Mr. Alden Delmar, Architect of the Government of St. Lucia, Ms. Rennie St. Rose, Attorney at Law, and Ms. Chanel Wallace, Insurance Agency Manager. Our team of mortgage lenders who are conveniently located at our branches in Viewport, Rodney Bay, and Bridge Street are eager to assist as you embark on your journey towards home ownership. For ease of reference, we wish to share their contact information with you. Gregerson Isidore at Rodney Bay, 456-1506. Rufina Aline Frederick, Rodney Bay, 456-1512. Shade Joseph Danzi, Bridge Street, 456-1123. Ian Nathaniel, Bridge Street Branch, 456-1508. And yours truly, myself, Wendy Pilgrim-Michael, Viewport Branch, 459-6801. Once again, thank you, and we look forward to serving you. Good night, everyone.
This concludes our webinar this evening. For further information on any of our services, visit our website at cibcfcib.com. Thank you and good night.